Hello, guys, welcome back again to another class. So, today we are going to be looking at market structure, break of structure, which is our boss, and change of character, and also look at top down analysis. So, this will be our focus for today. So, let me get rid of some of this so that we can do away with some of our. All right, so when we talk about market structure, what should come to your mind first is the direction of the market. Market structure is the direction of the market. It's what shows you whether we are bullish or we are bearish. So, for you to be able to trade profitably, you must have a good understanding about the market structure. When we talk about market structure, we don't mean this is where a lot of people get into troubles because this is where the problem lies. So many people don't really understand market structure and they tend to hide or tend to just try to push themselves hard to do when they are supposed to learn the basics of market structure, but they tend to ignore it. So, what market structure does is that it gives you the direction of the current trend or the market direction. That was why we talked about order flow in the beginning of our concept. So, without wasting much of our time, let's dive into the pictorial representation of how you see it on the chart. So market structure is basically, I think when we talk about trend, it's just markets giving us a trend. I think this was discussed on our earlier on our previous class. So this is what we call market structure. When price is breaking lows and respecting highs, it is called a break of structure, bearish trend. When it is breaking low, it is called bearish trend. When it is breaking highs, it is called a bullish trend. So this low that it's breaking, it keeps on breaking, it keeps on breaking. Therefore, means that this trend is bearish. So what are we going to do? We are going to be looking out for point of interest after each break for price to come back in and resell. So using our order block concept that we taught in our previous class, that is where we'll be looking at. That is what will be our point of interest, where we are interested in selling. Those order block and breaker block, our point of interest, we are always going to be looking out for price to retrace back to, then we look for a sell. Because each time we have a break, we always anticipate or expect price to pull back at least 50% to the range before it drops again. Pull back 50% to the range before it drops again. So this is a complete bearish market structure. A bullish market structure is the opposite. If I invert my chart, this is how it looks like. A bullish market structure is the opposite. So you want to see price breaking highs and respecting lows. That's to say, once it breaks the high, it should not break the low. It should respect the low and keep breaking highs. So in this case, we call this a bullish market structure. And how do we identify this? We start from the higher time frame so that we can get a clearer picture of where price is going. So let's go to the chart and see example of this. So if I should hit down, let me go to the daily. Now, I'll always advise, if you are looking at your market structure, always start from your daily, even your your weekly. Weekly you can use maybe a single candle to get the direction, but which I'm going to do that. I'm going to show you guys how to do that. but from 4 hours is where your market structure should start very firmly. 4 hour is a perfect time frame for marking out your market structure. Once you go below 4 hours, you're going to be seeing a lot of things that sometimes you might get confused. So once you get a direction from the weekly, from the daily, wait for your 4 hour structure to align with that weekly or daily direction. Then you engage. You don't just jump in because people the same bullish, day the same bullish, and no, no, no. So now let's look at the market structure on this time frame, which is our daily time frame. Now looking at the daily time frame, you can see what we have here. We're having a start from the bullish. I think this was a very clean bullish market structure. Have a low, a high, higher low, higher highs, higher low, higher high, higher low, higher high, higher low, higher high. What happened? Price failed to break this high with body. Don't forget, price should break with body before you consider that as a break of structure. But once it doesn't break with body, then you consider it as a liquidity sweep. So this was a liquidity sweep, not a break of structure. So after that, what happened? Price broke the last low here. You can see the last low was broken here. It closed the body. What did price do? Price pull back, drop again, pull back, drop again. So now it had to come back to the breakout of this place. And what happened? Sold massively. Broke structure again here. So that is why you're having price reacting on this level. So at this point, we are still expecting what? More sales on this market. Back to either here or here. So you anticipate once we get a confirmation here on the 4 hour time frame, we're likely going to shut it down to this area. Why? Because it's aligning to our daily. And even if I go to the weekly time frame, you can see high, low, higher high, sorry, lower high, lower low. Although this did not close below, so I call this as a liquidity sweep. But on the daily, it was broken, so I'll consider it as a break of structure. So coming back here, I'll look for more confirmation to sell. Now, if this low is violated, that is price close above or close above this high here, then here is my next point of interest for a sell. This extreme. You can see now. That's how we do it. So same thing occurred here. If this low was violated and price closing side and see decide to buy more, where do you think we are going to be buying selling again? This extreme. That's why I told you this extreme order block. That's why I told you we refine it. We refine them. Let me clear some of this diagram here so that you see. So you refine them to where this will be the extreme, and this one came in with an imbalance. So this will be the extreme. This will also be the extreme. And this will also be my break here. So that is how we trade the structure following the higher time frame. So I'm gonna go down to the 4 hour. I'm gonna go down to the 4 hour to do show you how to identify the structure. Once price get to this point of interest, you still wait for the same thing. See, if I go down to the 4 hour time frame, what am I looking out for? I wait for price to also give me a bearish structure before I do what I'll sell. So this is one, broke this low. Now price has come back to this still at that point. So if we have price do something like this, as it has created this low, we have taken it out because we couldn't close above. So if you can see price break this low with body, close below this low with body on this 4 hour time frame, perfectly you're going to be looking for it. So once you pull back here, you shut it down. That is how you combine your structure to trade. So this is how our market structure looks like on the 4 hour time frame. The same way you mark it on daily, weekly, that's the same way you mark it on the 4 hour time frame. Wait for it to perform this before you trade. Your break of structure is just your normal break like what I've shown you here. Once it breaks below the body, it's POS. Once it gets to this extreme, look for more confirmation. Then your change of character is just the first break once it taps into your point of interest. So immediately price tap into this point of interest, your first break of structure, it didn't show here on 4 hours. So if I go to 1 hour, let me go to 1 hour here. Let me use this particular one. This first break was a change of character. You can see, like me, I don't like trading change of character because it close with body. But price did what? Price came back and took it out. That's why I will always advise you, if price taps into that your higher time frame point of interest, be it daily, be it weekly, use 4 hours market structure shift or market structure break or even the change of character, anyhow you may call it, to trade. Don't go below that until 4 hours confirm before you can start selling in that direction till it gets to the next point of interest. All right, so that is how we do our market structure and our point of interest. So now, sorry, and our change of character. So looking at this price move now, once we identify our market structure, the next thing that should come into your mind is that, where am I going to sell or buy from? That's where point of interest comes in. Like I told you, we are looking at our order block and our breaker block. Now you can see this. This was my breaker block. Why? Because it took out this high before what broke the low. So this last bearish candle here, the full the bullish move that went up, is where I was looking out for the sell. Or it's what I'm looking out for the sell, which we had the sell, came back the second time. So I'm still expecting more drop. Now, if it fails, then I'm looking at this extreme order block that I told you guys is where I'm going to be selling from. So if, because I know definitely we're going to have a reaction. If it sells down to this point, fine. Then if it fails to, they will now finally use our final extreme, which I know if it gets to this point, that's to say that's a very massive, because that's the extreme turning point that we have. So that is how we mark our point of interest. You first of all identify your break of structure. That's one. Two, identify your breaker block and also your extreme order block, which is your 2 point of interest on your higher time frame, and wait for a confirmation on what? 4 hours. So doing the top down analysis now, which is our third step, this is it. You mark your uh, your point of interest on the weekly. If it's not clear on the weekly, you drop down to daily. That what we have, it's very clear on the daily. Then what do? You mark your breaker, extreme order block, and your extreme order block. Wait for price day and you take your confirmation on it. Same for our time frame. Once price get day, drop down to your 4 hours and you wait for confirmation. Once the confirmation is given, you shoot. So that's how we do our top down analysis from the higher time frame to the lower time frame. So thank you guys. We'll see in our next class where we will break down how we are going to be getting entries on those 4 hour time frame and also a higher time frame confirmation. All right. See you guys on our next class. Bye for now.